Good afternoon, folks. Welcome to another daily market review. Today is May 15. Wow, time flies. I thought we were still in April. Summer's almost there. Alright, today we had a trend day with CPI news, which is a typical delivery for CPI days. Um, so here, the overnight price action. Let me get ES here. So here's the overnight price action, which was trading above an hourly fair value gap. And right before CPI delivery 8:30, there was a bullish SMT divergence present in the marketplace. Here you can see Nasdaq is making a higher low, ES is making a lower low. So that was the first signal or first sign for a bullish CPI delivery. Well, let's go down to 1 minute and let's go over the intraday New York session. So here is the 15-minute SMT divergence. I think we can also see that on the 1 minute. It's because the time is fractal. All right. So at 8:30, price rallied, right? Formed a range. So this is the CPI high. Then you have CPI low, which is SMT low at the same time. So you need to take a look at this dealing range because a market will do what? It moves from premium to discount and then liquidity, right? If it's a buy side, it's going to be discount to buy side. If it's a sell side, it's going to be premium to sell side, okay? So once that range was established, and it was established before, hold on 1 second, let me annotate this. It was established before New York opened. So you had that down before, or you should have had that down before New York opened. And then watching the price action here in this range, there was nothing worthwhile. There's just one thing that I mentioned here on the live stream. There was a trap shorts on Nasdaq, which is technically smart money reversal. However, if you take a look at the range EQ, it never touched. You should not be trusting these very close proximity pullbacks. Okay, these are usually causing fake bounces. Okay, so if you think this is a long, it is not, because you're longing premium. Okay, this is very important. If it rallies, it's fine, just let it go. There's nothing wrong with that. If you miss a move, you miss a move. It's better than getting stopped or being taking a loss, honestly. So there is the inversion fair value gap, or BPR, which is low risk buy. As you can see, it tested several times before New York opened and after New York opened, and it never made that rally. Okay, which was really expected because it's not coming from discount. It doesn't have enough fuel to go run the CPI high. So after New York opened, let me pull up ES here because I need ES. Market formed a short-term SMT divergence in between highs at 9:35, and that SMT divergence indicating what? It is indicating that market is in sell model in the range. So if it's a bullish, it's going to be a pullback into what? It's going to be a pullback into the short-term sell side, which is the fake outs, the fake low. So it targeted the sell side, which is also the range equilibrium or discount. Here, the range EQ, traded into range EQ, rate at the sell side, ICT 2022 model, your long bias, targeting the highs, right? So in this price action, the execution is you can do a couple things. Because it was not a turtle soup, you can wait for a trap, you can wait for an SMT divergence, etc. So today what we got was a trap. because there's a CB. Price was accumulating below the CB, which makes it what? Here, I would say I'll take it off here, which makes it what? Trap or smart money reversal, whatever you call it. And this type of smart money reversal doesn't require what? An SMT divergence. At least here, it does not have to form an SMT divergence. Later on in the leg, here somewhere, it could manipulate further, but here down in this discount, it does not have to. Okay, so once the inversion is there, so the 10 o'clock candle, as you can see, it violated the fair value gap, left a BC, which is what? A BPI, and it is 10.02, and that is a silver bullet, a very high probability silver bullet, in fact. So that is a long, targeting the CPI high. It delivers. It was a slow delivery initially, but price action was there. It doesn't matter if it's slow or not. 55 points, which is fair. For the stop loss, I would say EQ, range EQ, or slightly below range EQ. So it delivered, it provided like 2 hours, 2.5 hours, depends on your stop loss. There's also one more thing here in the trap that I would like to mention. This is an aggressive entry. So here, market rated in a discount, right? If you have enough confluence or enough confidence in this consolidation, this accumulation, it is forming what? Look at these bodies. It is forming a rejection block. So if you have enough confidence to go long, this is a long. Is a very early long. Like I didn't see this at the time of the delivery during the live session. I saw it afterwards. But if you have enough confidence, like I said, to go long in this discount area, the wick here could be your first entry. So you can basically scale in. That could be maybe one contract, inversion of this fair value gap, retest, could be full position. So this could be your second contract or third contract, whatever it is, targeting the CPI high. Okay, and later on, it never stalled here after rating the buy side, right? Immediately after, you can see the candles at 1036 and 1037 expands energetically. So that expansion is telling you something. What it's telling you is, hey guys, I don't want to stall here. I want to be reaching towards buy side even further. So your job is to maybe go on the higher time frame and try to find certain liquidity points, maybe from the daily or the weekly or the 4 hourly, whatever the case is. So I had this high in my chart, on my chart, and I had, I think, 916, 619, yeah. I had those highs on my chart as a potential targets for today. So initially, I was willing to, oops, where are the lines? Okay, so initially, my main target was, in my long, was 568. I was willing to close my whole position there, but I didn't hold it that much. I was like, okay, I'm gonna be content with a low-hanging fruit objective because the account is in drawdown, so I was trying to get it back up to break even, which is why I had one contract long instead of two contracts long. So, anyways, let's get back to the price action. Here, as you can see, it rated the first buy side, and again, never stalled. So here, came back and forth a little bit, but the order flow is what? It is still bullish. It doesn't even pull him back. So for it to reverse or pull back, what you need to see in price action is something like this. This kind of accumulation or consolidation range bound market, they cause pullbacks or they cause reversals. Remember the interbank price delivery algorithm and how it delivers, right? If you have an expansion, after an expansion, you're going to have either pullback or consolidation and reversal, right? So it just reached higher and higher and higher, In this price action, I'm going to dive into that accumulation here to see whether it gave any short sells, short signals, or whether it gave any buy signals. But before that, let me go step by step. So here, price kind of broke down, took a short-term sell side here, traded into the OB, accumulated below a SIBI, right? There's this little SIBI here, and immediately after it was inverted. Okay, that is a first sign of a bullish or of a long execution. This would be a late execution, but I'm just reading the price here at this point. So rallied, came down. Now you have a new dealing range, short-term dealing range. You need to be looking at this dealing range. Never offered discount, but there's a breaker. Kind of touched there. They didn't touch like exactly. That touch there could be a long. I wouldn't long it, but it could be a long if you have enough confidence. Then it rallied, rallied, rallied. Here's price is stalling. So in this stall, what we have is, so because this is a trap, let me annotate that, meaning it's a smart money reversal essentially, or original consolidation, SMR. That low is your range low, new order flows low. Let's delete this, let's delete that, let's delete this, let's delete that. I'm just gonna clean the chart a little bit. And at this stall, you have this high as your expansion high. So from here to this high is a dealing range, is another expansion leg, okay? So if you have questions like why not this low, why not this low, whatever, etc., it's because this is smart money reversal. It's because this is trap, okay? That's why I'm looking at this low specifically. This is the real liquidity level. So you can see, I mean, I can see this on the 1 minute, but if you have a hard time understanding why this is the low, you can look on other time frames as well, which you'll see that this is a 5-minute low, 15-minute low, 1 hour low, whatever the case is, you know. So here's the range. At this point, it broke down, came in the range EQ and discount. There is a discount fair value gap here. Came down there. Body's respecting, and immediately after it rallied. So here, there's a scalp opportunity. There's another buy side target. So this is another entry. I wasn't watching the price live, but I'm looking at it for the first time right now. Here's the first partial. Here's the second partial. And stop loss would be below this low because this is an order block. 4R, a very tight stop loss, 37 points, pretty good. And in this price action, also, so I don't know yet. I'm going to look at ES. I think there should be SMT divergence at the highs, and then here, there might be another SMT divergence at the lows. Let's take a look at that. Because the pullbacks usually starts with SMT divergences, okay? Right here. In this price action. High, and then here. There you go. Nasdaq is making a higher high, it made a higher high, and ES at the same time making lower highs. Okay, that indicates what? If you're bullish, that indicates a potential pullback. If you're bearish, that indicates a potential reversal. Okay, and any rejection at range EQ or any discount PD array is a buy on a bullish day. So here, the pullback completes the objective by going into range EQ and trading, wicking into discount. And at the discount, as you can see, this is me first time looking at this price, by the way. I'm not bullshitting. There is an SMT divergence here. That is a buy signal. Once ES turtle swoops below, and you see Nasdaq is respecting the range EQ, you can long this as a turtle swoop, and the stop loss would be above the sell side, because which should not get violated. Then displaces immediately after, forms a breaker block, fair value gap, unicorn. That's another entry. Rallies. I would say anything above 619 you should not be interested. I mean, you could, you if you were long all the way down here, here, or here, you can leave runners, but I believe you should not be seeking further executions, like new executions. But let's take a look at it furthermore and see what's going on. Here, there's a new trap also. You can also utilize that as well. Accumulation below CB, inversion fair value gap, or BPR is a long. And moving further. I'm looking for more traps at the lows because they become the new expansions or new legs. But today, I believe what we had was first leg here. Actually, hold on. This is this is the first leg from trap to the high, and then short term another leg. Here, this is setting up another leg. Let's see. Let's find the high now. So here's a stall. Here, as you can see, there's price is not stalling. Yeah, it's going back and forth here, but that means nothing. Probably going for 5-minute fair value gaps here, or 15-minute fair value gaps, whatever the case is. These are not price stalling. This is just a retest on a fair value gap on a higher time frame. Stalling price is this, and not this, or here. Okay. So the first stall after this trap is, I would say, here in this price action. So that means we have a new dealing range here. And as you can see, there is a discount fair value gap, which is a high probability target. If this forms at any time an SMT divergence or indicates a potential pullback, this is your point of interest, not anything below that. This is. And there's all-time highs somewhere here. You can also pull your range high to there to imply a range. So let's take a look at ES to see whether there is an SMT divergence at the highs whatsoever. Yeah, there's an SMT divergence, I believe. Yeah, here. Nasdaq got weaker, made a lower high. ES is making higher high. SMT divergence. Now you can expect a pullback potentially going into tomorrow. So this high should be safe until price gets down into discount or range equilibrium. Same deal. And then you can target all-time highs. So I would say the highest probability target would be from range EQ or discount fair value gap to all-time highs. And the stop loss should be, I mean, that depends on the price action when it's reaching down here, but as a general rule of thumb, this low should be safe. As a general rule of thumb, though, it depends on what kind of smart money reversal market wants to form. Because sometimes it'll be a sharp return, sometimes like today it'll be trapped, sometimes it'll be SMT divergence within an SMT divergence. So you're gonna get a couple SMT divergences, which means market tend to be choppy. So yeah, I would say today was clean, easy read, easy market. I like these days, even though I didn't hold all the way up to my target. It's fine. Profit is profit, right? I just had to hedge my losses from earlier last week, and now that's done, we'll get back to our original risk parameters, hopefully. So yeah, tomorrow, like I said, I'm looking at all-time highs. Oopsie. Come on. Pull back. Here, either consolidate, reverse, or sharp return with an S&T divergence. So that's that, guys. Fun. This is fun. Hope you guys find this insightful. Also, one more thing I wanted to mention here in the morning session. With that trap, like I said, if you have enough confidence in your analysis, you can look down into 30-second chart I could have done this, by the way. I just didn't think of it at the time because I was looking for buy side, and this is literally what I was anticipating, which was panning out. Because of that, I could have turned into 30-second chart, but at the time I didn't think of this. Here's the trap, CB. Let's do this. CB inversion. The retest, like 1, 2, 3, 4 candles. Any of those candles are long. This is an early entry, so if you were to enter here, that's a starter position. Then you go on the 1 minute. This is another entry for pyramiding. So yeah, hope you guys find this insightful, guys. I'll talk to you tomorrow in the live stream. Take care. Have a great day.